Hey everyone, Coach Investor here, back to another video for today. So, Amazon, at the time of making this video, it's down around 18%, which means that Amazon is no longer a $1 trillion company. Bravo! Well, we're going to have a look at this quarter because, well, it's down 18% and you might think it's, well, the worst quarter ever. But to be honest, I went through it already. And to be down 18%, it should have been much, much worse. So we're going to try and explain what the heck was happening there. If you missed the first video of the night, that was about Intel, that will be in the top right corner. Probably tomorrow I'll talk about Pinterest because that's up 10%. As I said, since the start, Pinterest is not your ordinary social media company, but that's for another video. But first, hit that thumbs up button and subscribe if you have not. I would really appreciate that. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So these are the numbers the company reported. Net sales is up 15% to $127.1 billion. The market was expecting $127.47 billion. So a little miss there. But for earnings per share, well, that reached 28 cents. Market was expecting 21 cents. So missed on revenue, beat on earnings per share. But there's obviously way more to the story, especially outlook, which we're going to touch on a bit later. Now, of course, all numbers excluding the unfavorable impact of foreign exchange, those numbers will always be better. So excluding the $5 billion unfavorable impact, net sales would have increased 19% year over year instead of 15%. Okay, quite nice. Again, those unfavorable impacts from currencies, those are short-term headwinds. In the longer term, this will turn into a tailwind when, to be honest, it's already happening right now. If you look at the euro and USD, it's now back to €1 is $1. A couple of weeks back, well, last week, if you changed your dollars, you get more euros. And then when you see operating income, so that decreased $2.5 billion compared to, well, $4.9 billion in the third quarter of last year. And as I mentioned before, net income that came in at 28 cents per diluted share, but that decreased to $2.9 billion compared to $3.2 billion or 31 cents last year. Now, they did have this time a gain from their investment in Rivian, more specifically $1.1 billion. I'm going all the way down to the segments, which I believe if you've been following this channel, you've seen this 8,000 times already, but I think we'll get the full story, the full picture much better like this. So online stores actually increased 7% year over year or 13% excluding FX, which is obviously better than last quarter. Physical stores increased 10%, which, well, last quarter that increased 12%. So, well, okay, a little decrease there. Third-party sellers, talked about that, very, very important segment for the business, much better than an increase in online stores, which I like to see that this grew 18% or 23% year over year, excluding FX, also accelerating. Then subscription services that grew 9% year over year. That's a bit down because last quarter it grew 10%, but okay, fine. Current macro environment, we can take a little hit. But advertising services that grew 25% year over year. Last quarter that grew 18%, and advertising services obviously higher margin, and that's something that, well, it's something not a lot of people are taking into consideration when looking at Amazon. I mean, $9.5 billion, that's a very big number, and that's not slowing down anytime soon. And of course, we have to talk about AWS, and that's also maybe one of the reasons why Amazon got hit that hard, because that only, I'm saying only with some quotes in the air, only grew 27% year over year or 28% excluding FX, which means the streak of growing over 30% ends today. But AWS segment's operating income was $5.4 billion compared with operating income of $4.9 billion in the third quarter. Now, comparing that to last quarter, operating income was $5.7 billion. So quarter over quarter, there was a slight decrease there. So that obviously adds to the overall pain. Now, going back to another aspect that might have added to the overall pain is obviously stock-based compensation expense. That grew 75% year over year, also an increase quarter over quarter. So a huge increase here in technology and content, then sales and marketing, G&A, fulfillment, and then cost of sales. And lastly is obviously outlook, and that's the major reason why the stock is down so much. So they expect for the fourth quarter net sales to be between $140 and $148 billion, or to grow between 2 to 8%. Well, the market was expecting $155.37 billion. So, well, they're falling quite short there. This guidance anticipates an unfavorable impact of approximately 460 basis points from, you guessed it, foreign exchange rates. And lasting operating income is expected to be between $0 and $4 billion compared with $3.5 billion in the fourth quarter of last year. Now, of course, Q4 includes, well, the holiday season, which is always a, let's say, big quarter for the company. But as we've said in the past, just because that segment of online stores increases a lot during Q4 is not always that positive, because that's low margin. But of course, if, let's say, third-party sellers increase more, subscription services increase more, advertising services increase more as well, which are higher margin, that can maybe over time offset the online stores, and that's hopefully what's going to happen in the coming quarters, if not years. That would make Amazon, well, a much more valuable company. And I'm not talking about AWS, obviously. So to conclude, to me, again, this gives me, a long-term investor, a great opportunity to buy a company at a better price. Of course, Amazon is in my top 5 holding. No intentions on selling one single share anytime soon. I will probably be adding, maybe not directly tomorrow. We'll see how the stock stabilizes, but definitely next week. Obviously, do share your thoughts down in the comments below. What are your plans on doing? Do you hold? Are you planning on buying? Let me know down in the comments below. And maybe expect a Pinterest video tomorrow before the market opens. Go watch Teladoc, Shopify. We've covered that on this channel as well. Like and subscribe if you have not. And I'll see you all in the next one. Bye-bye.